watching Business World Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our top story. Bangko Sentral Governor Ben DIOKNO warns that the emergence of COVID-19 variants may cloud the country's pace of economic recovery. DIOKNO describes present economic activity as vastly improving, but notes that overall momentum remains foggy as long as there is a possible emergence of more virulent variants. And a big part of the population remains unvaccinated. Diokno's statement comes after the Philippines joined a growing list of countries that have imposed tighter border controls following the detection of the highly mutated Omicron variant overseas. Meanwhile, more than 36 million Filipinos have already been vaccinated against COVID-19. Year to date, GDP grew by 4.9%, well within the government's target of 4 to 5% growth for 2021. Diokno also reiterated that the Bangko Sentral is committed to an accommodative policy to support recovery. Now, manufacturing activity rose to an 8-month high in November. That's as new orders increased for the first time since March. The Philippines manufacturing PMI rose to 51.7 last month from 51 in October. That's the highest since the 52.2 print in March. IHS market economist Shriya Patel says this improvement signals a recovery in the country's operating conditions. That's on the back of new orders jumping for the first time since March, thanks to higher client numbers, rising footfall, and improved customer demand. A reading above 50 indicates improving conditions for the manufacturing sector versus the previous month, and a reading below the threshold means deterioration. Omicron fear still rocking the markets. You can see on my terminal here overnight in the US, the S&P 500 index posted its worst two-day fall since October 2020 amid, of course, the US first confirmed case of the new variant. Meanwhile, you've got South Africa saying its cases almost doubled from Tuesday. This new strain, which has, been shown already to have emerged in the UK, Switzerland, Brazil, is now also in Ireland and in Norway. The WHO's chief scientist, however, said that vaccines will likely protect against severe cases, but many medical experts, including Dr. Anthony Fauci of the US, says we need to wait 2 to 3 more weeks. Now, let's take a look at the Asian Open here. This after Asian markets fell on Thursday. You also have more news apart from this, variant going on. In China, for instance, Beijing has a plan to stop tech firms from listing their IPOs in foreign markets. This threatens to sap sentiment for those tech firms, but also Bloomberg's Stephen Engel did say this morning that this may be beneficial for Hong Kong Stock Exchange as the listings could possibly move there. Now, let's take a look at the open here. Finally, a bit of a rebound and some relief from yesterday's major sell-off. We're up by 0.3%. Yesterday, we were the hardest hit in the world's worst performer, even over a 5-day period. Yesterday, we slumped by 3.5%, the most since August 13. But of course, this did happen as well since we were playing catch-up. We were close, of course, on November 30 when most of the global markets felt that slide. Nevertheless, Jonathan Ravelas of BDO is saying investors are taking a conservative approach and the index can stay near or below 7,000 by the end of the year. I just want to take a quick peek at our currency here, the peso. 50 spot 383, a little bit of a weakness here this morning. This as the Banking Association of the Philippines has expanded the trading hours of swaps and currencies to the US dollar. It will be from 9 to noon and 1 to 4 starting December 6 and expanding further from Jan 3, 2022 from 9 a.m. to 4 p.m. Now, here to talk about what to expect this week, if we can even have any expectations, we have with us Manny Ocampo, Managing Director for Equity Capital Markets at the Investment and Capital Corporation of the Philippines. Good morning, Sir Manny, and welcome back.
Morning, Danny.
Sir Manny, let's talk about the performance yesterday. On the one hand, this had been expected. We were closed on November 30th. To what extent is this already, let's say, a time to be bargain hunting, especially when you look at the technical indicators?
Well, yesterday unfortunately, we broke through a couple of support levels at 7,200 that went very quickly, and then at 7,000 that also went that was past about midday. No, so then we settled at about just below 7,000. So then your next support level is really 6750. I think it's we're trading more technicals right now. The fundamentals remain intact. We believe, in fact, it's mostly good news, say maybe for Omicron, but the numbers are all there. I think the expectations already for inflation next week would be below 4%. I think that would be safe to say. And, people are talking about a strong fourth quarter or a rebound in fourth quarter GDP. And that also is pretty much on the way. So the fundamentals are intact, but, we're going, sentiment is there. Fear, if you'd like, is there. And unfortunately, that, the market is the way it is. It will react to Omicron maybe getting out of hand. So are we anticipating worst case scenario? The pronouncements of Fed Chair Powell also, I guess, didn't help. It's signaling maybe maybe US is going to be increasing, all right, bringing rates up to fight inflation. uh, Philippines, being in a global part of the global economy, will probably have to move the same way. No?
Mhm.
Despite BSP Governor DIOKNO saying, well, maybe for the first half of the year, we'll keep rates as is where they are right now. No?
Okay.
So we'll see.
We'll go back to that point. Let's look first at the technicals here, sir. The quick, if you can call it that, rebound today. Can we, even despite the fact that the S&P 500 had the worst day, yesterday, and we are opening in the green, what does that
Yes.
tell you? Does that show that, there's been a reversal, there's a psychological level at 7,000, nevertheless, that investors are looking at? And, if you look at the RSI and the MACD, it does seem to be that the momentum is towards the green. At least in the short term, can we expect that?
It's a big drop we had last yesterday, like you mentioned. So there should be some kind of technical rebound, call it that.
Okay.
Others will call it a dead cat bounce. We'll see. So there should be, if it we gain another 100 points today,
Mhm.
that should be about right for the playbooks of the technicians out there.
Okay.
Uh, Now, whether that reverses or that goes back in the red is really a function of, I guess, what we see as far as Omicron. I think Omicron will still be your lead, the
Mhm.
lead news, no, for where this market goes.
Okay, sir, when you look at the stocks that were, I'll take out the 5-day chart for you to see what happened in those 5 days. It's just a sea of red. As you can see, which ones do you think were the ones most quickly oversold here? And which ones do you feel were generally resilient, despite, of course, it was a broad sell off?
Yesterday they were saying was really the extended Black Friday sale for a lot of the blue chips, and
Yeah.
yesterday was really the day to get into the blue chips.
Okay.
If you haven't been in the blue chips for a while, yesterday would have been the right time. So you have the guys there, AC, BDO, Ayala Land, AC Energy would have been the right uh, right stocks to get into. Solid fundamentals, um, maybe foreign selling into it because these were the counters pretty much held by the foreign investors anyway. So moving out, there you have it. No?
Okay, so talking about the holding firms, why them? Why the blue chips? Given that you're mentioning that the fundamentals of the economy naman remain quite strong. I mean, it's expected for the mall players, casino players, maybe airlines and travel, even food. But why the blue chips?
These were the ones held mostly by the foreign or foreign investors, and these guys will want to go to safe haven. will move back to safe haven, no?
Okay.
When you have a the whiff of a pandemic or happening again. So the news, sorry, there was another piece of news I think that came out yesterday where it showed that the Philippines was at the bottom of the COVID response ranking. So that
Of
it
Bloomberg.
doesn't help us. It doesn't really help us. Yeah.
Okay, so let's go back to the statements of Jerome Powell over in the US. Why is it that we will be affected by that, specifically with the rates? Why do you think we need to be in step with the Fed?
Rates go up, the you'll have a the dollar strengthens. So when you have a peso weakening again, that will, a dollar strengthening will push commodity prices up. So that causes inflation back home, and the response there would be to raise interest rates also at our end. It's a playbook. It's a playbook move, I guess, by the central bankers. They'll take a look at the lead central banks for these types of things.
And what about, over in the US, they said that inflation is no longer transitory. We're still saying here it is, supply side driven, and we can still, get back to the target levels. That's been the consistent playbook. What do you feel will be happening here? Can we say that inflation will be elevated moving forward if we take a look at the global indicators?
Well, in the US, I think that seems to be the fear already, or the foregone conclusion, if you'd like, no, that inflation will rise over time. When they say transitory, maybe it's a supply a supply demand type of gap, but here it looks like the economy is already running on all four cylinders, albeit maybe if you'd like, they're running on smaller four cylinders right now. No?
Okay, sir, let's talk about one specific stock that I wanted to watch out for, Union Bank. This, of
Yes.
course, as you know, there it seems they're getting a coveted, chunk of Citibank. A lot of the other big banks have been pushing for this. Tell us how big of a deal is this going to be, and how does that affect their valuations?
Well, City Manila, no, has a fairly large, shall we say, they have a fairly big deposit base that is on the higher end. These are, people with, I don't know, average deposits of 2-3 million pesos, something like that, which is, several times more than the average deposit of most of the local banks. No? Most of the local banks, the regular depositors of City would be, shall we say, private banking clients already of the local banks. Now, so it's something that they will try to get into. Uh, Union Bank, I think, should have been a foregone. It should have been a foregone conclusion that they would have a lead, considering that Chair Justo Ortiz, no, was an ex-City banker himself several years back. So the mindset is there to take on a city-like character as far as their consumer banking business is concerned.
Okay, and finally, sir, outlook on the banks as being, is this still affected by these variants and these number of cases, or are you
No,
looking more towards, long-term recovery, bank lending, M3, and rates?
well, bank lending is the one that's holding the growth back of
Mm.
the banks. No? We don't see the banks aggressively going out and lending yet. Are they past or over the hump as far as NPLs are concerned? The provisioning and all that over the last several quarters seem to support the view that there's enough provisioning. The major banks, at least, have we'll call it, they've bulletproofed their balance sheets already, and which is a good thing. So you don't have the risk of a big bank failure. you'll maybe have a risk of maybe a few small banks, but
Mhm.
consolidation should resolve that over time. No, but the banks still need to go out and lend. Right now, they're making money on unfortunate profitability is not there. They're making money on government securities. Maybe right now you're seeing a lot of banks participating in initial public offerings. They're making quite a bit on fee-based income, but the traditional lending business that they should really be into, that's not quite getting back. I don't know if next year will be a turnaround for them, but we'll have to see. And
Mhm.
when banks start lending, that pushes economic activity again all over. So
Okay, so clear, watch out for that, whether the banks are moving toward from non-core back to core, and how that affects, of course, the economy. Thank you for those insights, Manny Ocampo of ICCP.
thank you. Yeah.
Here are other headlines we're keeping our eyes on. The Senate has approved on third and final reading the proposed 5.02 trillion peso national budget for 2022. Senators unanimously passed the 2022 General Appropriations Bill, which was certified urgent by President Duterte. Senate Finance Committee Chair Sonia Angara said the bulk of next year's budget will go to the government's pandemic response. The Senate increased the Health Department's budget by 26%. The DepEd saw their budget rise by 6.7 billion pesos, SUCs by over 26 billion pesos, and TESDA by 1.46 billion pesos. The House of Representatives and the Senate will convene the bicameral conference committee to reconcile conflicting provisions of the national budget. Congress leaders expect the national budget to be approved before December 17th. Now, foreign business chambers said the next government needs to open the economy further to foreign direct investments in order to supercharge the country's recovery trajectory. The Joint Foreign Chambers is urging the government to ease restrictions on foreign investments as part of the post pandemic reforms to boost growth and create more jobs. Specifically, the JFC is pushing for the passage of amendments to the Foreign Investments Act, the Public Services Act, and the Retail Trade Liberalization Act. Participants of a virtual commerce forum yesterday pointed out that China, Singapore, Malaysia, and Vietnam overcame poverty by opening up their economy to FDIs. And that's a first look into the business day. Today is Thursday, December 2, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.